big hello and a very warm welcome to Brand Equity with me, Sonali Krishna. Today with me, I have a very special guest. He is at the helm of a company that has just been awarded the Corporate Citizen of the Year, and that is no mean feat. Well, I'm talking about none other than Saugata Gupta, a man who's also continuing to be at the helm for the next 2 years. So many congratulations on your extension for the next 2 years, and hopefully we will continue to see you a lot more than 2 years. But great going so far. I think you must be breathing a sigh of relief with the Q4 results. Not just you, but the industry at large. Finally, after 6 quarters, there's been some relief. There is some positivity and optimism in the mood and the market. How are you reading this, and are you looking at this cautiously, or are you looking at this optimistically?
So the way we see it, we were just coming out of COVID. COVID started sometime in March 20 when the Ukraine thing happened. That led to two issues. One was very high food inflation.
Yeah.
And of course, our input costs, which were then passed on to the consumers, or we had to absorb some of them in the form of margins.
Sure.
Now, what happens in FMCG is that whenever there is high food inflation, especially at the bottom of pyramid and rural, urban and bottom of pyramid and rural, people then tend to titrate or downtrade in FMCG.
Right.
Because food is something people can't compromise
Absolutely.
on. Number two, what happens is that sometimes in order to maintain price points, we have undergone shrinkflation. Now, normally when shrinkflation happens, people think that, okay, I've reduced the grammage or the MLH, people will increase the number of transactions. In reality, it doesn't happen.
Okay.
And therefore, people then fix the outlay and therefore they titrate consumption again. And as a result, we have had, especially in rural, 3 to 4 quarters of decline, especially in some of the mass categories.
Sure.
I think the worst is over. Whether it's input cost, we have passed on some of the benefit to consumers in terms of pricing. We will anniversarize some of the shrinkflation. And I believe that this year will be a better year for the industry than last year, definitely. Now, how much recovery will happen, we'll have to see, because especially we'll have to again wait for the monsoons. There is this scare of the El Nino, but I think the worst is over. And certainly on margins, the industry will be in a much more better state.
Yeah, so I just want to take that, a little bit ahead when you say the worst is over, and, we're sitting in May, so you have some sense of, this quarter and how it's faring. Why is it that, for instance, the April data that has come out, in terms of just FMCG sales, why is it showing that only home care as a category has reported growth? And there is attribution, and you will be the best person to tell me that there is attribution for the sector per se, in terms of the fact that there was lower stocking by kiranas, especially in April because of dumping of inventory in March. And hence, we are seeing that kind of, slow stocking. Is this something that you're concerned about? Is it a one-off? Does it happen every year?
So I think, let's see, the data which you're referring to is not a pan-India data, because Nielsen is yet to, I think this you're referring to the
BISCOM data.
Yeah. So that necessarily is maybe a kind of a trend, but that's not necessarily the picture of the country. Now, the way to look at it, I think I will look at on a quarterly basis.
Sure.
And we have reasons to believe that, again, you can't look at one quarter, but over an annual full year basis, I think this year in terms of volume growth for the industry will be certainly better. If you look at even the declines in rural, if you look at quarter 1, quarter 2, quarter 3, quarter 4, we have seen that progressively it has been coming down, the declines. And for the first time, after a long time, HPC has delivered some volume growth. Food, of course, the headroom for food growth is far more, and food has been doing well. And food is far more urban-centric packaged food than the entire HPC. So I don't think that we should look at one point in it. It is giving you a directional trend, fine. But let us wait and see how the quarter pans out.
Right, and you feel like you are optimistic about this quarter, given that we're already in the middle of it. So it will give you some sense of how we are performing. I'll tell you why I'm asking you specifically and not moving on from this question is because I've read a lot of commentary of a lot of big FMCG leaders, including yours, including all the others, and everybody is talking about that they are stating that the worst is behind them. They are feeling sense of relief is there. Rural demand is showing, reasons to be optimistic given the fact that after 6 quarters, there's reason to smile and the demand is coming back. But there are so many ifs and buts. And my point is, are we being cautiously optimistic?
I would say so.
Okay.
I think there are two things.
Yeah.
I think there is far more surety on the margin improvement front.
Sure.
As far as the volume is concerned, even if there's a recovery, it will be gradual. And that's why I said that I think you have to look at from an annualized basis.
Sure.
Definitely, unless there is some black swan or a very bad monsoon, it's likely that the volumes will be better. Now, it's very difficult, as I said, that to give a quarterly perspective, but I think certainly I would say far more optimistic on the margins front. On the volume front, I would say a little cautious, but I would see a gradual improvement, I think.
Yeah, okay. But that is definitely the hope for all of us. But, if you just look around you today, be it as a leader or just, a citizen, average, lesser mortal citizen, you look around you and you see that, yes, while we are all stating that we're in a very good place, if you juxtapose India compared to the rest of the world, look at the global macroeconomic factors and, the war and so on and so forth, we're in a better position. But as we've started this year, newspapers and media has been filled with layoffs, right? And this is not just this is an urban phenomenon. We are seeing that in every day there are large companies laying off people. So clearly there is pressure for cost cutting. My question to you is: will the urban story, which has actually been performing better than the rural story, and now we are of course pinning our hopes on the rural story revival, are you seeing an impact on? When you look at what's happening, do you see that the urban story might get a little impacted because of this?
So if you look at it, I think, and you are absolutely right, so compared to the rest of the world, I think we are in a far better place. India is also a market compared to a lot of other emerging economies where the domestic consumption is the big driver of growth. And I see no reason to ever suspect that there will be stress on domestic consumption. Coming to the layoffs again, there are some companies and a number of jobs, that is completely insignificant compared to what's happening some other parts of the world. Okay.
Sure.
Number two, I think the kind of the productivity-linked, incentive-led manufacturing investment that is happening, it's going to create far more jobs. And therefore, I am not at all concerned about this issue. I think what is more concerning could be if the monsoon doesn't play out.
Yeah.
But I am actually, as I said, that India's story is very much intact as far as I am concerned.
Okay, that's great. So the India story is intact. You're saying that, okay, these are things that happen on a normal basis, so one should not take that seriously in terms of impacting consumption. It's been quite a tough ride for all industries, because 2020 COVID, then recovery, then the global factors, all of that, and now of course we're hoping that things stabilize. You've yourself talked about the fact that there has been a tremendous shift in consumer behavior because of what we've all gone through as humanity. My question to you is now, as things normalize, and with WHO finally giving us, a green signal saying we can put COVID behind us, the fear of psychosis really coming at bay, and we reclaiming our lives. Are you seeing those behavior patterns sticking, or are we going back to what we have lived until 2020 hit us?
I think in some cases it's the return.
Yeah.
But one or two structural shifts have happened. One in terms of, I think, adoption of digital. I'm not necessarily saying e-commerce, but adoption of digital as a means for, making a choice, interaction with, I think the consumer today is far more comfortable in doing digital. I think that's a permanent change, I would say.
Okay.
And in the case of e-commerce or digital adoption, I think what would have happened in 5-6 years has got compressed in 2-3 years. So there has been a significant acceleration and there is not any reversal.
Sure.
The second thing I would say is that people are little more concerned about health. Because if you see, look at COVID, I think people who had a certain condition were far more vulnerable to, COVID. And therefore there is, earlier days, maybe a lot of people used to depend on destiny as far as health is concerned. I think far more conscious this one to health. And therefore healthy eating, a little bit of better, in a healthier way of living is something I would see. That doesn't mean that suddenly you will see an exponential growth in nutraceutical and functional foods, But at least healthier or better for you is something which is a trend we are seeing.
So you're not seeing that as a fad that came in. People had more time also, sitting at home and working. Now we are back to battling traffic. So I'm saying, you're not seeing that as just a fad and going back. Because, for instance, you also have these influencers who have suddenly also become very big. And while the sector was looking at, let's say, health foods or healthy for me foods as taking off, at least in urban India, there are now people like Rutuja Devekar who are very staunchly talking about going back to eating, how you did in the olden days, how your grandmothers and your grandfathers taught you. So there is a strong force also that, so don't get carried away with avocado, don't get carried away with quinoa, all of that is also happening, right? And there is also that change happening. So as Indians who love our food the way we are comfortable with, so you are Bengali, you would love on a normal day, 3 out of 5, 7, 4 out of 7 days you'd like Bengali food. I'd probably like more comfort South Indian food, right? I'm saying, and we're so particular about that, are we really being able to do that shift?
I think you are absolutely
and
right.
Taste.
I think, firstly, you're right. The Indian consumer will not compromise taste for health, okay? And therefore, as you see in our food also, we are very clear that we have to deliver on taste. Number 2, anything we offer, you have to offer an Indianized version. To give you an example, why has masala oats been successful and breakfast cereals as a category hasn't penetrated in India? It's because we realize that this is a Western eating habit. Indians like it crunchy, Indians like it hot and not cold, they like it savory. You convert that into from a cold breakfast into a tastier, yet healthier in between meals. The second big thing, people are talking about ghee, for example, and ghee is as good as an olive oil, okay? The third thing, I think millets, and that's one of our big drivers of our growth in the future. And millets is something which our forefathers and everybody had eaten, and that's good. So it's important that we don't forget that the Indian habits of the past, and you need not always adapt to something, because our metabolism, our bodies and everything is tuned to something which of the past. And therefore, the adoption of the Indian way of living, an Indian healthier way of life. So it's extremely important. So to give you another example of it, if you look at the entire plant protein as a sector, now I'm clear in India what will happen is the way plant protein will develop is it's developed from a soya nuggets, and what we are trying to do, how do you make it from a commodity into a value added soya nugget? It's not going to come from mock meat. Mock meat will remain a very niche kind of a thing in India. But
is it taking off, Saugata?
I would say, there are two things. One, of course, there's a significant amount of meat-eating population who wants to turn vegan.
Exactly.
Here, anyway, there's a critical mass of this one, and we are also very conscious. For example, it's not that I eat non-vegetarian food every day just because of health. Number 2, I think what will take off is the mass end of soya, because that's a low-cost protein for a lot of mass end, and that's where I think it will, in India, unless in food, if you don't massify it, and if you don't Indianize it, you don't get a scale.
So, okay, so with your insights and what you're saying, do you think the FMCG, food category and companies that are chasing the healthier food space are approaching this right?
I would think so. A lot of people see, it's again, to give you an example, today our entire snack, we started with ragi chips, makhana, they are all traditional, this one, okay. Masala oats is a classic example of that. So I think someone making chickies, for example, and selling packaged chickies. So I would think if you want to get scale in foods, you have to Indianize it. You have to make it tasty. And I think if you look at the headroom for growth in a packaged foods market is enormous.
Yeah.
And therefore, instead of going Western, and there will be a market, okay? That market, obviously, when somebody who will have the granola bar and all that, but that's restricted to 1% of the population, I guess, and 1 to 2%. That penetration is unlikely to increase significantly because if you look at it compared to personal care, usually the habits are global. Of course, hair oiling is a very Indian, but actually, surprisingly, hair oiling is actually big in Middle East, in North Africa, some parts of Egypt. But otherwise, personal care habits are global. But food is extremely local. And if you look at it, I think it's important, and I believe the headspace and there's a huge unbranded, food space. And therefore, over the next 10 years, people will want hygiene, convenience, and taste under a brand which is trusted and reputed, and therefore there's a huge potential and upside for food brands in India.
Okay, so let me take that into, so it also means that if I'm moving to packaged foods, right, as we move to packaged foods, it also means I need to pay a little bit more for it, right, compared to loose. I want to talk to you a little bit about what we've seen as a phenomenon, but of course, I'm not sure if it is sustainable, and that is quick commerce, right? All of us have become quite lazy and gotten used to, the quick commerce bit. Having said that, after usage in some time, you realize also that you are paying a premium for the service because you are remembering it last minute, and the penalty for not planning is a premium. And you're doing that. And I don't think anybody at the moment, of course, it's nascent, is making money. But I feel most people have also realized that this is a last-minute resort. If I can plan, whether it is with my banya, who's equally smart today in terms of his delivery mechanism, or if I can do it with people who are, who are giving me a next day delivery, but the cost is much lesser, I'm happy to do that because I'm saving. I'm saving some dollars. So, do you see in India, while this was great during COVID and all of that, and our headspace was somewhere else, as we come back to reality and as we start doing personal accounting, do you see Indians taking on to quick commerce as it is projected? Or do you see this as a difficult space to crack in terms of just these players becoming more profitable? And also give me some insight about, like, if you have Marico's portfolio on these things, what is the offtake compared to, let's say, a modern trade versus a kirana, with different distribution channels?
So I see quick commerce playing a role in a top-up. Obviously, you can't do your planned groceries unless you really run out of something. It's an emergency. It also delivers convenience because at the end of the day, if you order from somewhere else, are you there at home to pick it up, or so it gives you that convenience. Obviously, certain categories do well. Like, for example, foods, snacking. You need a soft drink or a juice. So there are certain categories that are much more prone to e-commerce. Even we are seeing, for example, and if you really look at it, lower AOV items, especially of food, is far better on quick commerce than to do on e-commerce sites, general e-commerce sites, because grocery is about large packs and all that. So I think it has a role to play. Now the question is on the profitability. I'm not the expert on profitability, but all I can say is that I think we need not compete to deliver in 10 minutes, 15 minutes. I'm sure the consumer can wait for
30
half
minutes,
an hour. And if there is a cost-value equation to that, it's fine. But I think it has a role to play. And see, India is such a big market, and I keep on telling people that anything is an and. For example, people predicting that GT will die because e-commerce modern trade is going. Indian kirana is. They are very smart. They are adapting themselves. They are transforming. So it's always an and not an or. And I think similarly, whether it's cash and carry, whether it's B2B, the only thing I would say in the overall organized retail, I don't think India will be very difficult for the extremely convenient stores, that chain convenience stores, because as I said, the Indian Kirana is a very, very, what I call very, very savvy, this one. So even organized retail, I guess the large box format has a much better, long-term, propensity to, grow than a mid-format kind of a thing, because India real estate is expensive.
Yeah.
People cost is sometimes you think it's not expensive, but actually it's relatively expensive. So the infrastructure is unique. So I think there are certain things will do well, certain things will not do well. But as far as quick commerce is concerned, when it's with the role of as a top-up, role of impulse food, I think there's a role there.
When you're talking about this convenience store format, am I getting you right when I assume you're talking about the 7-Eleven type of?
Kind of a format. I'm just saying that if you look at it in a lot of developed markets or in Southeast Asia, they have completely replaced the pop and mom store.
Sure.
It's unlikely to happen in India at all.
Sure. Having said that, you did make a statement where you said recently that you feel general trade needs to perform a little better. What did you mean by that?
No. See, what happened in the last few quarters, if you look at it, that since this general trade has declined in our case, and I think it's not doing that well in FMCG because of two reasons. One, in the urban, they're getting squeezed a little bit because of e-commerce and modern trade. And the entire rural trade consumption goes through general trade. Yeah. And that is where they have got impacted. It is extremely important that we, the point which I was mentioned is that and I think it's going to happen. There's a transformation happening and I see it happening in front of my own eyes, that a lot of people moved from closed format to open format. They're investing in computer, they're investing in far better. And I think GST has been a great driver in what I call, the entire trade, somewhere formalization of this one. And I believe that it is extremely important for all FMCG players, as I said, that to encourage, just as we are ensuring. And I think the other thing which has impacted, general trade in the past, what we call a channel conflict. Now we have a differentiated portfolio. We operate minimum operating price. So protecting the traditional distributors and general trade, it's something as a FMCG, a company, it is definitely something we must do.
But you're saying, as of now, if you've just observed the proliferation of distribution channels and the access through which a customer can order your products across platforms, you're saying GT has been a little impacted.
It is a little impacted in urban, but as I said, the rural is because of rural consumption. But let me tell you something. There is no substitute for direct rural distribution, and it is going to be a long-term source of competitive advantage and an entry barrier. So organized players who have very large scale rural distribution, who do direct distribution, will continue to enjoy. I think India is 50% is still a rural market.
Yeah.
The entire activity or hyperactivity is happening perhaps in the top 10 towns, top 15 towns.
Sure.
And as you just go down, even in class 2, class 3 towns, you are not going to see that modern trade or e-commerce completely taking over. Each channel has a role. I think what is important for all the players is to identify the role. For example, I see modern trade and e-commerce as a driver of premiumization and driver of innovation. Sure. Similarly, so each channel has a role. And as I said, that India continues going to be an invest to grow market for 10 years, 20 years, 25 years. I think we have to partner with each channel so there is a win-win relationship.
Sure. One thing I've observed as a customer, say I want to order a Marico product, but slightly bulk buy, right? If let's say I go on to an Amazon Fresh or a big basket, and I look at it and I order the same thing from my Kirana, the kind of deep discounting I'm getting by an e-commerce player is far more attractive for me to go and buy it from there. My question to you is this deep discounting and hence seducing me to buy it from their platform. Who is taking a hit on the pricing?
So let me tell you something. I think the way we look at it is that we try to ensure that there is what I call each channel has a SKU. So certain SKUs, for example, a slightly smaller SKU will be advantaged in a general trade.
Yeah.
Certain SKUs will be advantaged in a modern trade or an e-commerce. and that's how we want to do it. We, to a large extent, also operate differentiated SKUs. For example, for some of our core brands, the SKUs that are available in modern trade and e-com are different from the SKUs that are available in general trade.
Of course.
So that we don't we operate a minimum operating price. We ensure that channel conflict is led to a minimum. So therefore, I see that each channel has a role, and at the end of the day, obviously, each channel has a growth opportunity, and even a lot of kiranas today will give you some discount today.
No, they don't give.
No. I'm saying that if you look at the standalone open format outlets, some of the cities, they do operate. And see, we have started to treat some of the open format outlets, a standalone open format outlets, just as the way we deal with modern trade in some extent.
Okay, but would I be right to assume the incentives right now are being passed on to not GT as much as the other distributors?
Not really.
That would not
I think we are extremely channel neutral. As I said, we want the channel to grow.
I'm not talking about Marico, I'm talking about the industry.
No, but as I said, it depends on the category and this one. No?
So basically, home and personal care.
It also depends on packs, large. So
large packs.
If you are driving premiumization as a thing, now the point is, suppose I'll give you an example. If in a home care category, when you're trying to sell a 2-liter product, I'm just giving an example. Maybe it will be advantage there because that might not sell through the normal kirana today.
And if I had to ask you, let's say, if I take a 2019 as a base and now juxtapose it, let's say, with 2023, in terms of, share from distribution channels, how is it performing for Marico?
So just to give a perspective, I think in the first 2 years, obviously, modern trade got more impacted than general trade during COVID because of the entire issue of excess, so I think and then modern trade has gone back to recover. So I would say that there has been a significant increase in e-commerce, but I think the momentum of growth in e-commerce is going to moderate, and some of the
already moderating.
Some of the things are moving into back to modern trade, and I think GT has been fairly resilient.
Yeah.
It's only the last few quarters because of the rural, which is an urban, I think it's been fairly resilient.
And in terms of, the difference in terms of the share contribution to you?
No, that is because our shift has happened a little bit also because of our portfolio. If you see a significant growth in the last 2-3 years has happened in foods.
Yeah.
And to a large extent in digital brands. Now that growth obviously is a little more modern trade and e-commerce skew. But if I look at my core portfolio, has it changed? No. In fact, we are making a more conscious choice to ensure that our core portfolio is driven much more through GT and rural especially, because that is where the potential is. For example, our rural contribution is still, I think, slightly lower than some of our peer set.
Sure. Can you give me that figure?
So you see, like to like, and the reason, so ours is some 34%, direct rural. Now, one of the issues is because the entire foods and Saffola is very, very urban centric.
Yeah.
If we take it out, then it's equal. But I believe that there is so if I reach around 1 million outlets directly and our overall reach is say 6 million, 6.5 million, I believe there is significant scope for us to invest, and we are continuing to invest behind our quality of rural distribution.
Sure. When you talk about digital brands, Saugata, what do you define as a digital brand? Like born on digital and will be sold on digital and marketed on digital?
I think the way we define a digital brand is that a significant portion of our sales happening on the digital platform, and essentially, and this is how we define, almost 80 to 90%, if not 100% of our even advertising is on digital.
100% is on digital?
No, so look at
digital brands.
For digital brands.
Okay.
Now, when it makes a crossover and starts mass advertising, we call it digital first. For example, there's a brand like Live On and all, which has a skew towards digital or modern. They are skewed digital. They are not digital first brands, but skewed towards digital. Then there are mass brands, which may be 6-7% coming from less than this one from digital space.
So how many digital brands do you have now?
So we have 3 which are acquired. Beardo, which is now we own at 100% in the last 3 years. We have Just Herbs, we have True Elements, and we have our 2 own homegrown brands, which is Pure Sense and Coco Soul.
Okay. These digital brands, it's a good example to understand, because one also talks about, like, how do you modify your marketing mix as we become a much more complicated landscape. And if you have like 5 digital brands that you are nurturing through the digital ecosystem, it'll be interesting for me to understand from you how you actually see the investments in terms of awareness, advertising, publicity on digital, and sales. Are you seeing that kind of efficacy that the digital ecosystem is actually being able to deliver?
I think one good thing that has happened in the last 1 year, because there has been far more sanity in terms of funding. So therefore, the ACOSs and the entire consumer, customer acquisition, the CACs have become reasonable. So I believe it's good, because what will happen is, in this now, good quality brands will thrive.
Emerge, yeah.
And some of the brands which I mean, there's no vanity in cash burn anymore. So I believe that, what do digital brands offer? I think digital brands offer, it's usually a founder with a lot of passion, an unmet need, huge agility, velocity of innovation, and lastly, significant digital marketing capabilities. Now, if you look at, and I'm talking of personal care, because food is slightly different.
Sure.
Food is very difficult to have digital brands because of the AOV and the gross margins. Okay, now at 150 crore level, I think when you have an awareness, and therefore you start initially driving basic penetration, but far more cross-selling or retention of. So to give you an example, in one of our brands, the repeat average order value is more than 2x and the new customer average order value. So I think while customer acquisition is important, I think repeats and getting loyalty is extremely important for digital brand.
That is dependent on the product.
No, I know, but I'm just saying that it is a lot of people, if you keep on doing a constant leaky bucket where you have a thing of a constant customer acquisition model, profitability may be a problem.
Sure.
Now, once you cross 150 crore mark, I believe the time has come to move towards GT, or a very selective GT. I mean, it could be chemist, cosmetic for a personal care, and selective MT. Now, that movement, when it happens, then the capabilities required are completely different. And there you are then competing with traditional players who have perhaps a right to win.
Yeah.
So to give you an example, and I think it's that, let's say we have onion oil now. Now, I think Mamaearth has done a fabulous job, of creating it. But when it comes to GT, perhaps Marico has an equal right to win.
Absolutely.
Then this one, and therefore I think that is where the digital brands has to start developing these capabilities, which are completely different when you are actually in brick and mortar. Now, in food, it is different simply because of the fact that food, other than functional food, nutraceuticals, protein supplements, which are high AOVs, for the other food, it's far more important to set up distribution. And if you look at it, some of the food brands, whether it's look at Epigamia, ID, you look at Viva, they have set up. But again, it's a very interesting way, the way we are also approaching food. You don't need to get into distribute all outlets. If you're there in e-com modern trade, and you're there in, say, we have 20-25,000 outlets, very much you get a significant part of the weighted tea.
But in terms of, let's say, when you say digital brand, right, the discovery of that brand, right, how are you finding efficacy in the discovery of a digital brand via digital?
Yeah, absolutely.
Yeah.
I think it's, again, you have to have a fine balance between, investing behind performance marketing and building brand equity. I think what happens is a lot of brands where people have a desperate urge, building to sell, then they get into discounting and performance marketing as opposed to building off-platform brand equity. And I think one of the things, and this is one very, very interesting thing we look at when we look at founders when we acquire, and as I said that we don't acquire 100%, we let the founders grow, and our job is to support them into realizing their full potential.
Sure.
We look at people who have a mindset of building to last, and not building to sell. And I think that actually makes a significant difference, because see, anybody can do the 0 to 50. 50 to 100, some people will do it. But that 100 to 500 and 100 to 500 journey profitably, very few will do it.
Saugata, how do you judge that? People are good actors.
I think, as I said, that we believe that 100 to 500 journey, by partnering with a strategic, so I might not be the best in the world to do 0 to 100, Marico. But we are building digital capabilities and with a house of brands, with far more synergies that I think strategic with the right. And one of the reasons we have been perhaps a little more successful in this model is our culture of empowerment, culture of this one. Culture makes a huge difference. And I think that ability, and we perhaps, and that is my aspiration someday, that can I be the best in the world in scaling up digital brands profitably?
Absolutely. And I think for you, somebody at the helm of this, large organization, and yes, culture and culture, ethics, being a corporate citizen have all been core values of this organization, and you embody that. But how is the experience of running a large ship like Marico, which is, I would say, defined as technically a traditional company, vis-a-vis now your attempt to, work with new age founders and build your digital portfolio? And I would say this would be also your premiumization play, right? And juxtaposing both those cultures and being able to do justice to both and balance that as a leader. How is that experience? Because it's very different.
I think if you look at our history, and we have been successful by punching above our weight. So as we have scaled up, we have ensured that we maintain our what I call an owner's mindset, or founder's mentality. And therefore, we describe ourselves as an insurgent incumbent, or a scaled insurgent rather than incumbent. And that culture is there in the organization. Having said that, we were clear in the beginning after some attempts that these are two entirely different business models. The mothership, as I call Marico 1, if I call it, is based on a repeatable model of driving efficiency, large brands, right distribution, mass, media. So it's and yes, I mean, obviously agility, speed are important, but here it is about scale. This is about, as I talked about, high velocity innovation, passion. The tail SKUs of our core business is the hero SKUs of the digital business. Okay. Similarly, I think the capabilities required, or even people. If I look at it, large companies, you don't have so much risk pay. You have a very, very competitive fixed pay along with some risk pay.
Yeah.
In a digital world, it is about very low fixed pay but a high, risk pay. And you need a certain mindset, a risk appetite and all that. So initially, when we decided that it is important to keep these things apart. So the way we look at these digital brands is almost like an engine 2, we call it Marico 2, with a house of brands, We look at capital allocation, we look at portfolio, they can't launch anything they want. And we look at reputation and quality, compliance. These are very important.
Of course.
The rest, they are free to do. And as I said, because of our unique culture empire, we allowed to do that. And we allow the founders to prosper because we realize they have a better right to win than us. As I said, that 0 to 100, we don't know how to do it.
Sure.
The second thing is we realize that you need a different set of people, different set of processes, different set of compensation. When we transplanted some of our own people, we realized that they are not wired for that kind of a business. Having said that, some people have been successful, but we are now recruiting a completely new set of people for that engine too. We have kept it, even we won't be at 100%, though they continue to operate out of Ahmedabad. Just Herbs operates out of Chandigarh. True Elements, of course, operates out of Thane and Pune, but not in our office. And we have deliberately kept them separate so that, we continue to let them, prosper. At the same time, what we have also done is, are there synergies between all three, whether it's a common data stack, common logistics, and that we'll have a complete system advantage compared to a standalone, startup company. For example, recently we have just started a nano manufacturing unit within our plant because our plants were designed to actually do only large runs. Now I can do those ones for Beardo or a Just Herbs. And when you insource, you automatically get a 200 bips, margin advantage. Okay, so we can deliver that. So we have done this, and I believe this is a model that actually will work.
And how long are you giving Marico to define it like that? in terms of a gestation period to become profitable companies?
So I think at least 2 of our brands will make profit in the next 12 to 24 months.
Oh, wow.
So, and as I said, that is something because of the synergies which we have. We are a house of digital brands. We are not one digital brand.
True.
And therefore, I think it is very much possible. And as I said, that we will, and that is our aspiration, that when it comes to driving sustainable, profitable growth, we should be in a top quartile in doing that. And therefore, we should be a destination strategic investor for all founders who want to realize their full potential and just not do IPO. If you don't want to do IPO, we are the people to come to.
Sure. So now if you have 5 of these brands, I'm assuming this is focused and this is the next strategic, aim to kind of diversify the portfolio. What is your outlook towards looking at more such founders and categories for such players to include in Marico too?
So I think when we started this journey in 2019 and we started, I think, ahead of the curve, we identified certain categories which we believe have a right to, which are market attractiveness for succeeding in a digital space is high. It is our adjacency and they have a right to win.
Yeah.
So we picked up, for example, premium male grooming. We picked up modern Ayurvedic personal care, which was Just Herbs. We did premium food. I think there are a couple of gaps in that portfolio, but it's pre-decided which categories we want to participate in. I don't see ourselves participating in categories which are not adjacency at all to us.
Okay.
For example, diapers as a category, for example, sells a lot in e-commerce. Doesn't mean that I'm going to do it because there's no strategic fit to us. It's not an adjacency. Because at the end of the day, our aim is to participate in these categories one day, then move it to a GT one day, and then create, out of these 5, there could be 2 scaled 500 crore brands.
Who will move to Marico 1?
Could move to Marico 1 someday, yeah.
Coming back to Marico 1, right, where you're doing the mass play, how difficult is it, Saugata, given that your brands are very well known, right, whether it be Saffola or it be Parachute, these are, common household names in India. So how hard is it at this point for you to push further consumption? Not penetration, but consumption.
I think Saffola is a great example where in the last 3 years, we have completely changed the face of the brand.
Many congratulations on becoming a 2,000 crore plus brand.
If you look at Saffola, I think it was a very under-leveraged brand. If you look at the history of Saffola, it was almost like a therapeutic brand. It's completely heart health. Only if you are a sufferer, you consume it. And we participated in a category where it was seen as less evil. Okay, and now we have transformed this brand from individual to family, from oil to food, and we want to, and therefore, if you look at, today the total addressable market, it has gone 10x because we used to just participate in, and I think we dabbled in a lot of very niche things like, cholesterol, atta and all that. Those were perhaps in hindsight,
mistakes.
Not the right thing. It was mistakes, okay. I think we realized oats started with a heart health, but when we realized very quickly that if we start to participate in a plain oats, it's a commodity. Number 2, it's not an Indian habit, and that's where the masala oats came in. The biggest thing our realization is I don't have to pre-sell health. I have to deliver taste with Saffola. I have to move from a sufferer to an individual who wants health, not necessarily just weight management. And very soon, slowly we'll move to family. And so that's a journey, and I think there's tremendous headroom. I see today maybe food overall Saffola franchise is 20%. In the next 3-4 years will be 50% of the franchise. And the other interesting thing is that as you scale up, I think we are now focusing on profitability.
Yeah.
And in any case, the Saffola Foods makes a better gross margin than Saffola edible oil.
As I wind down this interview, Saugata, the FMCG industry estimate of growth for the next year is somewhere between 7 to 9%. You think this is an achievable target for the industry? 7 to 9%?
This year, it's last year there was a lot of inflation-led revenue.
Yeah.
It's unlikely to be this year, and therefore I think, and given the base, I think a mid-single-digit volume growth for the sector is very definitely possible. Obviously, we believe that food will continue to outstrip, the HPC growth. But 7 to 9% revenue is very much possible in the sector. And I think also that a lot of the FMCG players could give also double-digit profit growth.
Double digit. That's very lovely to hear. Very, very optimistic. A couple of questions on this whole manufacturing bit stress that, India has taken, saying that we need to become the next China. I mean, that's, of course, some time away. I have a fundamental question. Yes, we have the demographic dividend. Yes, we've got the government's intention and intent in place. But what about skill, Saugata? And I'd like you to be candid. You compare our skill to China, to Vietnam, to Ethiopia, to Cambodia. Somewhere, don't you think, in terms of skill, we have some upgrading to do? And quality of labor?
I think if we look at, I think it's not an issue at all.
No?
We have to focus on, obviously, developing alternate skills rather than, people just wanting to be, that entire, obviously there is a job to be done in the higher education system and, what I call technical education. Having said that, just like Indian leadership is the best quality in the world, and
sure.
if you really look at it,
no, that's not debatable.
There is no reason to believe that Indians will not be able to develop that skill. I think what had happened is that...
But the Indians who are at the top of the pyramid, like you or the others we've seen, these are different quality crops. So pedigree crop versus, low-grade crop, there is a difference.
No, as I said, that there has to be a job to be done in the education system, which we need to do in terms of technical, practical education. But see, I think it's a chicken and egg. The moment you look at it this way, and I'll give you 2-3 examples. The way we created talent for the entire BPO outsourcing, call centers, 20 years ago, maybe it's not. Or if you look at how sports today, I think sports initially, like cricket, for example, a lot of cricketers were only from Bombay, Delhi. Today, it's all from the hinterland. You look at reality TV shows today, how it has brought aspiration to the hinterland and everybody is coming in. And I'm extremely, see, the good thing about India is that Indians by nature, we are extremely entrepreneurial, we are adaptive, and there's a very aspirational nation. So I don't see that as a reason for it. I think what is required is, what I call, we need to be far more, what I call, a little more process-oriented and focus on execution excellence and discipline. I think that is something by nature we should do. And I believe that, I think the biggest change that has happened, if you look at it, and whether our investment in infrastructure, whether it's our ability to do large-scale digitization, there is no reason why we can't do this. If you look at our ability to do, digitization, nowadays only NRIs come to India and, deal in cash, we Indians, we don't need to do it in cash, okay? And therefore, our ability to do large-scale transformation is phenomenal, okay? And I'm sure and I think we are already seeing this, that with the China Plus One, the fact that some of the manufacturing, this one is being set up, I think there's no reason to why we will be able to do that skill building. I think it's extremely important that if we have to leverage this democratic dividend, we just don't do it services, but we get the manufacturing and the export over the next 3 to 5 years. And it's going to be our decade if we manage this well.
Well, I truly hope that happens. And on that note, thank you so much, Saugata. Before I leave, I have to congratulate you once more on not only ensuring that Marico, runs its own shop with such diligence and ethics, but has also been able to cross over and do, these new age things and fuse it with a traditional system. Plus, to also continue on the path, with responsibility, and hence, of course, many congratulations on being the Corporate Citizen of the Year. I don't think it's possible without good leadership. So, all thanks to you, and here's more power to you and Marico going forward.
Thank you.